Hey everyone. So, due to popular demand, I'm here again with another interview with Mahad, who's the founder of Block3 Finance, which specializes in crypto taxes. I'll be asking Mahad some of the questions that you've asked me to ask him. Now, for those of you whose questions didn't get answered today or would like a free 30-minute consultation with Mahad, feel free to email him at mahad@block3finance.com using the promo code Crypto for Canadians. I'll leave all of that in the video description. So thanks, Mahad, for being here again today. Great to have you on.
Thank you so much. Hello, Crypto for Canadians and fellow community of crypto users in Canada.
All right, awesome. Now, before we get into the questions, Mahad, why don't we start off with a brief introduction of yourself and Block3 Finance for people who don't know who you are.
My name is Mahad Mohammed. I've been an accountant in Canada for 25 years. Part of my 25 years journey as an accountant, I've worked for the Big Four accounting firms. I've worked for Canada Revenue Agency. I currently work every Tuesday for the Federal Tax Authority in UAE. Over the last 11 years, I've been running my own accounting firm, Tax Partners, which basically services different types of other books of accounting requirements. But the past 11 years, I saw a trend, and the trend was a lot of people asking questions about crypto accounting and tax, and I initiated Block3 Finance. Block3 Finance is the largest and global accounting firm for crypto users, whether you're in Canada, US, Bulgaria, doesn't matter where you are in the world. Everybody has to do accounting or tax. We service over 1,800 different individuals and crypto companies and Web3 startups. We've been blessed in that regard. And, our team has gotten stronger over the past 3 years. We now have 34 accountants in our team and 4 administrative assistants. All crypto accountants and tax experts.
Wow, that's amazing to hear that you've grown significantly over the past few years. And I'm sure that's gonna grow even more to greater numbers, especially with this past bull market that we've just kind of had, or we're still kind of in a bull market.
Yeah, no, I see the trend, and as more individuals become users, and BlackRock and Fidelity and ARK Invest all helped grow our business at Block3. A lot of people are now asking questions. Yesterday, I was talking to an individual who's 71 years old, and he's saying that he's going to start a YouTube channel and helping people that are 70 plus on how to buy Bitcoin.
Oh, wow.
So,
That's awesome.
I know, and he's based out of Bowmanville, and I'm so happy for him to be creative in that aspect. So the more users, the more requirements, and the more regulations, the more tax, the more audits. So Block3 Finance has always been here for the crypto community in Canada and abroad, and making them cultivate need for subject matter expert like crypto accounting and tax.
Awesome. All right. So I guess we'll just jump into the questions. Now, the first one is, why should I or someone use Block3 Finance compared to my current accountant? What advantages does Block3 Finance offer?
First of all, Block3 Finance is a crypto accounting and tax firm. When Block3 first emerged with Warren and Kevin and the team, we sat down for months and we said, we need to know our market. We need to become a subject matter expert. When clients or individuals email us, we need to respond as soon as possible. And we need to set up a proper technology in terms of helping them. And then segment service offerings such as awareness in the community. So when you compare Block3 to even a crypto accounting firm in Canada like Matrix or others, one of the things that you'll see with Block3 is that our team has committed to writing 2 to 3 articles per day about accounting and tax. You're not going to meet a subject matter expert, somebody who knows what you're looking for. Whether if you are an individual who's in staking, in mining, airdrops, CFO, offshore, day trading, DeFi, all those things are in the crypto. It's like you becoming an accountant. When you say you want to become an accountant, there's an audit, bookkeeping, payroll, tax, internal audit, control, CFO. So Block3 Finance has become a subject matter expert for crypto. And one of the things that we established is that we have a strong leadership with me, Warren, and Kevin, and we make relationship as our asset. So when you're working with us, communication is important. Understanding what your objectives are important to us. And that relationship goes a long long way, because once you are a customer or a client or doing business with Block3, we want to make you a customer for life. And this is how we believe and run our business. So every single one of our clients that we've had has been with us long time. One to mention, Gavin Wood of Polkadot, and Charles, us providing a consultancy for Cardano, or even Andrew Kajorn from now Sonic Labs. Those have been the predominant pillars of our client list, as well as individuals, the day traders. Every single individual has been with us for a long time, and we continue to provide the same quality service, whether you have $1,000 holdings in crypto or you're a millionaire in crypto. We treat you the same.
That's awesome. I love that you're taking a long-term partnership approach with your clients.
Yeah, thank you.
Okay, so let's take a look at the next question. Can you clarify the audit process when Block3 Finance is involved with helping their clients with the CRA?
You can never be not ready for an audit when it comes to crypto. The one thing that I want the crypto community to know is that because there is no income tax slip that is reported to the Canada Revenue, there's always questions around it. What is this other income? What is this business income? What is these capital gains are from? And the softwares that are existence today in preparing your tax return, whether it's TurboTax or Intuit Profile or Tax Prep or so forth, they've made these changes in order to read whether you're a crypto user. And if you are a crypto user, it's easier to do an audit. So at the time of the audit, if you are a client of Block3, the service fee that you pay includes audit support and audit assistance at no cost to the individual. Okay, so that's the number one peace of mind that we provide to our clients. The second thing that you need to understand is that when you do get audited, Canada Revenue does not give you a long timeline to respond. They usually give you between 15 to 30 days, depending on the scope of audit. So there are two types of audits. There's a desk audit. That's the first one. A desk audit basically means that the CRA auditor will send you a letter, and then they're in Newfoundland, for example, and then you have to submit all your documents through the online portal, and the auditor is reviewing from their desk. The second type of audit that exists in Canada is a field audit. A field audit is when a CRA auditor assigns the file to the nearest tax center. So let's say if you are in Toronto, the nearest tax center will be the Shepherd and Finch area. And the auditor then would come to the accounting firm, the location of the accounting firm, and do the audit inside our office and ask questions about those blockchains, those Ether scans, those on-chain, those CSVs, those reports. And Canada Revenue has been doing a lot of field audits as of late than desk audits. When they're doing a field audit, they're sending someone who's a crypto specialist in terms of reading on-chain. Now, when you do get audited, and as I said, you have 15 to 30 days, using an accountant who's a subject matter expert is very important in this space. Using tax softwares like Coinly or CoinLedger or ZenLedger or Token Tax, those are great softwares. They make their job easier for you. But when it comes to record keeping, when it comes to audits, when it comes to questions, when it comes to did that token exist? For example, I'm working on this file today. Phantom became Sonic Labs. Now, with Token Tax software, it makes you deem disposition the Phantom. All of a sudden, you're triggering taxes. That is not correct because Phantom became Sonic Labs. So we have to make sure that as your accountant, that we have those record keeping, we have the forks, we have those migrations in order to help you explain it to the auditor when you're getting on audit. Because if you look at the on-chain, it looks like Phantom was deemed disposed, taxes are due, and then now you have Sonic Labs at the price of 46 cents when Phantom was 85 cents. So there are these type of things that are very minor, but you don't know, Token Tax doesn't know, your accountant, by them being a subject matter expert, they're able to read up those kind of questions and say, hey, what is this? Why is this happening? And those are what you will get from Block3. And this is how we will be able to explain it to the auditor at the CRA and saying that, listen, this is what happened. And here's the supporting documents. So from start to finish, Block3 Finance will help you through that process. And there wouldn't be any questions afterward. We try to do the legwork early on so that way that the audit process would be smooth.
When it comes to audits, what does the CRA use to determine if they should do a desk audit or a field audit?
It all depends on the amount of gain, okay? Because you submit a tax return and then, you have the amount of gain. Every software, the crypto tax software calculates it as a capital gain. It never calculates as a business income. So when you have a large amount of gain, Canada Revenue can say, I want to sniff. And by them looking into the tax return, they would look at the previous years. And then they would look at the 2024 2024 tax return, for example. And then if the 2024 tax return has a large amount of owing and there's a large amount of installments and you're not paying those installments, Canada Revenue will ask questions around it. And they would say, why are you not paying your installments? All of a sudden an audit comes. And then the audit, then it becomes, hey, I would like to, normally they would send a letter. They would ask you to call back. And when you call back, then they would ask questions. The auditor would be asking the client, the taxpayer, questions. And based on those questions will determine should they be a desk audit or a field audit. And a desk audit is usually quicker. It's about 4 to 8 weeks. A field audit is longer because now the individual wants to go through the on-chain, wants to verify the transactions. So that is about 10 to 12 weeks process for a field audit.
Okay. And another question about the audit is, do they normally audit you if they suspect or if they have a high degree of certainty that you're hiding something or that they can potentially sniff something out? Just because if auditors are getting paid to do a job, don't they have to make it worth their while to chase after certain people? Example, if they suspect someone owes $200, but it's going to take like 5 hours of work just to get $200, it's not really worth their time, correct?
Correct. I agree with you. And to add to that, being a former, with the CRA and understanding the audit process and the optics of the audit guidelines for the CRA, normally I've seen also where process was a desk audit and then becomes a field audit. And when it becomes a field audit, oh my goodness, that means that the auditor has something in terms of either unfiled, unreported income, offshore crypto income, the T1135, the foreign income verification. They're looking at tax evasion, tax prosecution, tax avoidance, penalties, and that kind of stuff. So far, all the clients that have been with Block3, they haven't had that issue. However, I've seen the new clients that will come to us as a result of the accountant just entering the Coinly report. And now they're going through an audit and saying, oh my goodness, Mahad, this is what my accountant did. And, my accountant has no clue about cryptocurrency. And I need you to help me and resolve this. And by then, I'm now taking on a client who has anxiety issues, can't sleep, and now has to report all these exchanges. Some of those exchanges no longer exist. And it creates all these problems for the individual by going to someone who doesn't understand crypto accounting and tax to begin with. So this is one of the things that I want to make sure that the crypto community knows, that if you are participating in cryptocurrency, that you should partner with somebody who understands, somebody who's a subject matter expert. Don't go to someone who will bluff and talk, interview them. In crypto, we say, do your own research. Make sure that you do your own research and finding out that that accountant knows what they're talking about. And particularly individuals that participate in DeFi, oh my goodness, they have not had an accountant that would take on. Majority of our clients at Tax Partners are in the NFTs and the DeFi. So, having an accountant who understands yield farming, liquidity pool rewards, borrowing, lending, flash loans, governance token distributions, like, the NFT purchases, should a GST, HST be applied, royalty payments for NFTs. Those are all things that a typical or traditional accountant wouldn't have a clue about, that you want to make sure that you go to a subject matter expert. And Block3 Finance has always been here. That's why we provide a free consultation appointments for individuals that are subscribed to your channel. And we want to make sure that we make them comfort and they understand that why we're not like the traditional accountant and why we're not like everybody else in terms of guiding them through this and navigate them through this audit process, whatever they need in terms of understanding the percentage of the pain points that they go through every year in filing their taxes.
Awesome. That's a really good way of putting it. Do your own research. Otherwise, you're going to be holding the accounting bag.
I would say all these meme pumps and dumps. Yeah, no, I agree with you. I agree with you.
All right. So let's take a look at the next question. How does Block3 Finance reconcile CSV files that are given by exchanges, and what reports do I receive?
Tax softwares that I mentioned earlier, it's easy plug and play. The problem with that is that not everything is plug and play. Like, they don't make it easy. They don't make it easy in a sense where if that exchange has gone down, or like a Binance, for example, then you cannot connect to the tax software because you don't have the APIs anymore, right? Or the APIs has expired, or it's a DEX Phantom wallet. Like there's no APIs for that. So it makes it tricky and it's not correct. The point of the matter is it's not correct. It's only 60 to 70% correct. Now, when you give us the CSV files, what happens is that we organize it in a way that is readable to you. So we take all the text IDs, we itemize it based on the network network of chain that you used, whether it's Ethereum, whether it's Solana, whether it's Arbitrum, Polygon, Base, you name it. We have the trade secrets. We created our own reports in order to reconcile those reports. So because we've been in crypto since 2011, I've seen the trend. I've seen all the things that the market needs, the user needs in terms of being comfort, like what CRA requires. We created those documents and those reports in order for us to be able to give you a final output of what you need. So the first thing first is we need to itemize all the tax IDs. The second thing that we do is we divide at the end of the year from January to December what those wallets contain in terms of business income or capital gains and so forth, and all the fees, and then the net profit and so forth. The third thing that we do is that we take the USDC or USDT value, and then we use Bank of Canada's conversion rate in terms of from US dollars to Canadian dollars. And then we take that information and report it to the tax return. And then at the end of it all, our clients, each one of them receives a completed tax ID summary of each wallet, okay, which is very important. The second thing they receive is what exchanges that we used, which is Bank of Canada's average cost, which is required under the Income Tax Act. And then the third thing is that the report is easily read because they have all these wallets and each wallet is summarized. Now, does token tax give you that? No, they don't do that. So what you expect from an accountant is what you will get. What's the reason why you're filing a tax return? You're filing in order to be compliant. Now, none of these crypto tax softwares have ever received a certification from the CRA, okay? Even if you go on their website and you call them, just say that, are you certified by the CRA? Show me those certifications. This is why I say do your research, because what happens is that they say that it's authorized, but it's not certified. It has two different meanings. So because it has two different meanings, why would you use something that will get you into hot waters? The fact that, as I said earlier, you have 14 to 30 days to supply those reports. Meanwhile, at Block3 Finance, we did the work. We have the work. We will submit the report on your behalf. We will follow up with the CRA on your behalf, and we'll make sure that we explain to the CRA if there are any questions. You can go carry on whatever you want to do with your life. Leave this to us, which is the reason why you hired us in the first place.
Amazing. So you're basically paying for a stress-free experience.
Right. And this is why I said earlier, relationship to us is an asset. It's not something that we take it for granted. We want to make sure that each and every one of our clients is taken care of. And we want to make sure that if this is the space that you want to participate for a long time, and this is where you're going to retire from and not from your 9-to-5 job, we want to make sure that it's as easy as possible for you and for your family in order to have those compliance taken care of.
That's great to hear. So yeah, let's take a look at the next question. Do you think that one day crypto exchanges will have to produce a report for taxes like banks and brokerage firms do?
I hope they do. There was Justin Hartzman at CoinSmart. I met him back in 2019. Justin is one of the brilliant individuals. Now he's with CoinSquare and Kevin O'Leary's exchange. One of the things that Justin and I spoke in 2018, 2019 is how do we get a report for the Canadian exchanges to produce a report for taxes? When you go to your financial institution, they give you a slip called T5008.
Yeah.
So one of the things that I spoke back then to several crypto exchanges, including Kraken and so forth, is why don't you produce a T5008 for all of it? I can help you do that. But then what I realized that I had to change a course is because a day trader is treated different than an investor. So how do you deal with a day trader? So one of the challenges that these crypto exchanges have, especially the Canadian ones that have been certified by the different provinces, because I live in Ontario, the Ontario Securities Commission has certified certain exchanges. One of the things that the community needs right now is more clarity. And in order to have a clarity, it has to come from our government of Canada. And as BlackRock and all these come to Canada, we know BlackRock's IBIT now is in Canada. So as all these ETFs comes to Canada, one of the things that I hope to see is the government regulate these exchanges to produce a tax report like banks and brokerage firms do. And I see that one coming, but I don't see it coming in the next 2-3 years, but I see it coming in the next 5 to 7 years because it's going to be very complex in terms of handling those tax IDs and transactions and stuff like that. So we'll see. Stay tuned.
That's fair enough. So the next question is, I recently moved to Canada from India and work full time. Before moving, I had opened a Binance account and completed KYC using my Indian ID. I initially made investments while in India, but I have continued trading on the same Binance account after moving to Canada. Since I am now living and working in Canada, am I considered a Canadian tax resident this year? Do I still have any tax obligations in India, or am I now only required to file taxes in Canada?
That's a mouthful. I had to write the point forms in order to answer all and make sure that I provide you with the accurate answer. Look, Canada and India has a tax treaty. Okay, so that's the first step. Part 1 of the Income Tax Act says, where do you reside as of December 31st? And in this instant, the question is fantastic that it addresses dual residency, like, a part year that you were in India, you did your KYC at Binance, and now you're still using Binance. At the end of the day, as a Canadian tax resident, as of December 31st, you report your income and the gains in Canada on your Canadian tax return. And the reason why I would say this is because as of December 31st, because you resided in Canada and there is a treaty between Canada and India, you have to report all those incomes in Canada, despite the fact that Binance is not allowed in Canada. So that doesn't exempt you from not having to report that income in Canada, right? There are individuals, those regions, some of the exchanges that are not allowed to be used in Canada. There are some individuals that are still using it, using a VPN. That doesn't exempt you from not reporting that income in Canada.
Okay, so regardless, you still gotta include it in your taxable income.
Exactly.
All right, so let's take a look at the next question. In the last interview, you mentioned that the CRA considers 2 trades a month day trading. Can you elaborate on this? Why do they consider 2 trades a month day trading?
This question was asked of me several times by individuals that booked a free consultation appointment. Let me clarify, which is very important. So first thing first, when you buy something in the TradFi or legacy world, you're buying something as a whole. Now, when you have your TFSA, do you do 2 trades per month or more? No, you're not allowed to do that. So if you do that, Canada Revenue is going to void it. Or even the fact that, you go to your TradFi, like, to your financial institution, and you become 2 trades per month, there is an argument because the T5008 will be submitted to the CRA. CRA will already see that, and they can come to you and say that you're a day trader in the normal course of business. Now, the argument that I will position to you as a crypto community is that when you're buying 2 Solana, let's just say 2 Solana. Solana right now is at $173 US. Let's say that you're buying 2 Solana. When you go to a centralized exchange and you put your buy order for 2 Solana, when you look at your tax ID for that 2 Solana, it breaks it down to, depending on the on-chain, who's selling what at what ratio. So it might break it down to 4 or 6 or 9 or 10 or 11, those 2 Solanas. Now, Canada Revenue does not look at what you are buying. They look at what the tax ID says. Now, because you're buying 2 Solana, that doesn't, good faith, you are buying 2 Solana, which is accurate. But in return, you received that 2 Solana in 11 transactions. That 11 transactions for that 2 Solana in one day, definitely CRA can make an argument and come to you and say you're a day trader. So CRA doesn't look at what you're buying. They look at the tax ID, the wallet addresses, the CSV files, because that speaks more volume than what your intentions are. Because when you go to the financial institutions in Canada, when you buy in 2 Tesla stocks, you buy in 2 Tesla stocks in one transaction. You're not buying it in 0.1, 0.4, 0.6. So this is the distinction between crypto and why you are considered a day trader, because of the number of transactions, unlike the financial institutions. And this is why I say go to the subject matter expert like Block3, because we will catch it, we will educate you. Maybe the first year we will use it as an education. The second year, we want to make sure that you're protected and you're guided properly, so that way that CRA does not have this argument, right? So in order to avoid it, setting up a corporation is very important, because by you having a corporation, you're creating a living entity. And by you creating a living entity, there's no arguments between you and the corporation, because the corporation is registered as an investment corporation. So that will mitigate all these issues with the CRA, and you can sleep well at night knowing that, 1, you have a subject matter expert who's looking after your taxes and your accounting, and 2, that you have a corporation that you could do, your degens, you could buy your NFTs, you could do your staking, you could do your minting, you could buy all the meme coins. Go buy Trump coin and do a leverage 100x. It doesn't matter. The corporation is taxed differently, and the treatment of taxes in a corporation is much better than you as an individual, right? Because of the tax brackets that you have.
Okay. Just to kind of go back to that question, the 2 trades a month, that is for both buying and selling. Example, the 2 Solana. The 2 trades also looks at buying. Is that correct?
Exactly. So the earlier example, you're 100% accurate. The earlier example I gave you buying 2 Solana, it works the same as if you're selling 2 Solana, because the person who's buying is buying as 0.1, 0.4, 0.3, 0.8. So CRA, again, they look at the number of transactions. They don't look at your intention of what you're buying.
But what if all you're doing is buying and you never sell until years later on?
That is fantastic. If you're a holder like Michael Saylor and you're buying and you're not selling, then there's no tax treatment. So therefore, there's no arguments of being a day trader, right? You're just buying and holding, buying and holding. The question becomes is that throughout the year, if you sold something or if you're staking something and you're receiving those staking rewards after you buy those 2 Solana, right? So those are the type of arguments that CRA would have. A traditional accountant would tell you, oh yeah, this is not day trading. But trust me, when CRA starts sniffing, they are going to argue, because the rules are not clear for day trader or an investor. Because the Income Tax Act is not clear, CRA uses tax court cases. Those tax court cases, when it comes to crypto, CRA will always prove that you're a day trader. And they've done that countless number of times. This is why I'm an advocate for setting up a corporation and not worrying about what you do in crypto than what you do personally with your T4 income and so forth. So to give you that an example and answer your question, you buying that 2 Solana, all of a sudden you can stake it at 6.5% on Exodus. What's even worse with those staking is that they give you interest daily. So if they're giving you interest daily, guess what happens? Do you have another tax ID every single day for 365 days? What do you think that's going to happen with the CRA if you send them the CSV report, right? So this is why I'm a big advocate of saying, listen, if you're in the space and you're here to stay in this space and you think that you're going to retire from this space, kudos to you. This individual that I was talking to last week, he's 19 years old and last year he made $2.5 million in meme coins. Now, he wants to buy a house, but he has no income. He hasn't even finished university or college. So my point is, if this is what you want to do in terms of staying, just distinct yourself from crypto by putting everything in a corporation.
All right. No, that's awesome. That's really sound advice. Put it all in the corporation and not worry about it because you guys are going to handle it all.
Yeah, it's very important to have a good partner. And this, I can't stress enough. Everybody will pass off as, oh, yeah, they know crypto, they know Bitcoin. But when it comes down to the weeds, do they really know crypto, or are they just going to use your Coinlet report? Do they really know what NFT stands for? Those are the questions that you need to ask and do your research when you're partnering with someone. It's very important. You're not going to go to deal with a financial advisor unless you feel comfortable with that financial advisor. Why would you trust someone telling you that they're a crypto accountant, but on their website, they have no articles about crypto? They're basically talking about Web3. Do they know what Web3 finance is? Do they know what crypto tax planning is? Do you know what a crypto voluntary disclosure is? Those are questions that you have to ask in scrutinizing who is who. One thing that I want to say, which is very important, is that the offshore crypto income, right? Earlier on, when we're talking about crypto exchanges, you also have to keep in mind that, and CRA is heavily going after a lot of people in this, is that if you are using an exchange, so let's say Coinbase, you're using Coinbase, and at any point, okay, the key word is any point that you've had more than $100,000 Canadian, even for one day, like Bitcoin pumped and it got to $100,000 at 1 p.m. By 4 p.m., Donald Trump said something and it went down to 40,000. That few hours, that exchange would show that you have $100,000. Therefore, CRA would expect you to report the T1135. And if you don't report it, CRA is handing out $2,500 penalty. Now, do you think a traditional accountant would know that? No, of course not. So this is what you get from a crypto expert accountant who will guide you through how Canadian crypto taxes work, how crypto voluntary disclosures work, unfiled crypto taxes, unreported income, the T1135 for the foreign income verification. All these things are very important to a typical crypto user in order for them to be able to be guided and be taken care of in case that CRA ever questions it.
But going back to that form, do people have to fill that out if they are, let's just say, in Canada and their coins are on their private wallet?
As long as the private wallet is located in Canada, the answer is no. Now, what is located in Canada is the question. Now, if you're staking it, or if you're in a DAO, you're lending it. Let's say that you're an Aave fan, okay? You love Aave, and you went ahead and you staked your ETH, and then you participated in the loans. All of a sudden, even though it's in your wallet, in your ledger, and you're lending it through your ledger, if that is what you're doing, then you have to do the T1135. But if you're a spot holder in a ledger in Canada, then there's no need to file that 1135. So every situation is different. So it's important to understand those situations so that way that you're guided properly.
Okay, that's good to know. Yeah, where your coins are makes a difference and whether you have to file it or not, and depending on what those coins are. But yeah, no, that's really interesting. Okay, well, let's take a look at the next question. How do you prove your transactions on a DEX if audited? They don't provide detailed reports like on centralized exchanges, and crypto tax software can be unreliable or not support the DEX. What will the CRA accept in this situation?
I'm happy that this question was asked. When Solana and Base and Virtuals were pumping late last year in 2024 and earlier this year in January, and everybody was trading virtual AI coins and whatnot, there is no tracking when it comes to using a tax software. There is no detailed reports. But however, you have access to on-chain transactions. So you have to provide me with a CSV. There are options to download the CSVs, but you can also go to your log, your history, in order for you to be able to download it and provide them to us. Now, how will CRA accept these DEXs if you do get audited? As I said earlier, Block3 will do the reporting and the organization and making sure that you have sufficient wallet addresses, the public wallet address, the tax IDs, everything that you need in order for your record keeping. So you don't have to worry about it if you're coming to Block3. What you have to worry about it is that if you decide to go to a traditional accountant and that traditional accountant just takes whatever you say. Oh, I went on Base and I bought virtual, and then I went to Hyperliquid and I went on a DEX and I did all these things. Good luck, because those tax softwares are not able to connect to those phantom wallets and so forth. So you are going to be in a big trouble if that is what you want to do. That's why I've been saying when it comes to CRA audits and when it comes to record keeping, when it comes to you going to a subject matter expert, Block3 will tick off all those points in order for you to be able to have the peace of mind and the reports that you need in the event that you do get audited.
So basically, you guys have your own secret sauce and you'll make sure that everyone's taken care of.
Yeah, exactly. Nothing is perfect. It took me a long time to develop something that is satisfactory to both the client and the regulator. Whether if the regulator is in Canada or UK or the IRS or Australian tax authorities, I've helped individuals in different jurisdictions in terms of making sure that the audit process went smooth. So those documents or those reports that I've had, it's been 11 years in progress. Coinly wasn't even around at that time, right? So
yeah,
this is what you get with Block3.
All right. That's amazing that people can come to you worry-free. So the next question is, how do you handle token migrations for taxes? Example, you're holding the original token and you're given new tokens to replace the original ones.
Token migrations are non-taxable events, okay? It's very important. Because the migration is treated as a continuation of the original investment, there is no disposition or realization event that would trigger capital gains. That is very, very, very important. I'm going to repeat again. Token migration are not taxable events. So the earlier example that I gave you is Phantom, which is a fantastic coin. It got renamed to Sonic Labs, okay? Because it got renamed to Sonic Labs, Phantom was 85 cents at that time. Now, Sonic Labs, when it got migrated, became 35 cents. Now, the CRA looks at the original investment and how did the original investment impact the token migration? Now, if you are using Block3 Finance, we would document all those things because, for example, today it's on the internet. 5 years from now, it's no longer on the internet. But, Canada Revenue has 7 years to audit you. So by us having that record keeping will prevent you from having to rush with your pens down trying to find answers and how you're going to explain to the CRA how to track token migrations. So there is no taxable event when it comes to token migration. And the way that we would report it is that we would explain it to the CRA that this chain was this before. And if you go to CoinMarketCap, you will see that Sonic Labs started as of, let's say, February 1, 2025. And before that, there's no record, there's no history. So CRA would say, well, how did you get Sonic Labs? These tax softwares, they don't have all those things that you're looking for. So they wouldn't answer questions in the token migration. So CoinTracker, Bitcoin.tax, ZenLedger, TurboTax, all those ones wouldn't show you that it was a token migration. They would treat it as a taxable event. But when you come to Block3 Finance, we would take care of that. So that way that you don't pay taxes that are not necessary. And there's been a lot of token migrations over the last 11 years. So many of them. You know, look at Polygon. How many times has Polygon got renamed? Matic, Polygon. And so because of all those things, you can count on Block3 to be able to help you and answer those to the CRA and to you as well.
Awesome. So the next question is, if your funds are stolen due to your account getting hacked on an exchange, what are the tax implications? What does CRA expect at this point when filing taxes?
I like this question. The reason why I like this question is because there's been so many rug pulls with crypto, including myself in the beginning, right?
Oh, sorry. Oh, no. Hopefully it was in a corporation.
Listen, everybody has gone through this. I mean, everybody was in Quadriga back then. Everybody was on Mt. Gox back then. So at one point in your crypto journey, you got rugged, or if anybody is going to deny it, they're lying.
I totally. Yes.
So if somebody says to you they've never been rugged, they're lying. Don't believe them.
BS.
So if the funds are stolen or the account is hacked, what I tell individuals is that, first of all, go to the police. Okay, create an event. Create things that I can use to the CRA, to the auditor. So I always say it's not what you have, it's how you use what you have. Okay. So because you've been rugged or you've been hacked, go to the police and say, hello, police, this is what happened. I need that police report number. The second thing is that you have to go to the Canadian fraud hotline. You have to call that number and get a file number. Once you have those two things, a police report and a file number, if I'm filing your taxes at Block3, I will claim it as a loss, a capital losses. And if Canada Revenue audits you, then I would say, look, this individual was hacked and they lost all their coins. This is the blockchain of that transaction. What they've done is that they've gone to the police. Here's the police report number, the description, the police officer's badge number and their name. The date that it was reported is important. And then here's the Canadian fraud file number. By me creating those events, Canada Revenue has never declined any capital losses that I've ever claimed for a client, ever. Now, there's been where an individual went to a traditional accountant and they never provided them with those guidance. And what has happened is that CRA questioned it because it was a large amount of capital loss. There was this one file that I was working on last year. The individual sent a lot of money to a company called Novatech, and Novatech went down. And because it went down, his account was showing $300,000 US dollars. Now, this individual went to a traditional accountant and CRA questioned it and CRA denied it. But then because CRA denied it, he came to me and he said, look, Mahad, this is what happened. Go on the website, the SEC, the CFTC, they're all looking for this lady. And I said to him, listen, go to the police, take these articles, go get me a police report number, go report it to the Canadian anti-fraud, get me the file number, I will get you a win, okay? After he did all this, I went ahead and I wrote it back to the auditor. I asked the auditor to open the file again. I got a new reference number. I was able to submit all the documents with Payal and with Kevin. And they went ahead, and after the CRA agent reviewed it, all of a sudden those capital losses have been reinstated back to the tax return. So imagine, what would you have done if you went back to your accountant and you said to them, hey, my capital losses have been declined. Can you help me? What do you think that traditional accountant, they don't even know what blockchain is.
So, whoa! Oh, really?
I asked that individual and I said, did you go back to that accountant? And he's like, yeah. And what happened? It's like, he doesn't know anything about crypto. He doesn't know what to do. He told me to go take a hike, stop participating in a Ponzi scheme. That's that is what this person was told. And because of that, I want you to know that by you having a subject matter expert, by you coming to Block3, trust me, relationship is by far more important to me than money. Money, I have to get paid in order to pay employees. But the work and the level of work that we will do for you as a client, we want to make sure that you're guided properly, which is very important because all these stuff that's on the internet is going to fade, is not going to exist. But record keeping, understanding what your obligations are, those are things that you will learn from Block3. That's why I said earlier on, our team has committed to writing 2 articles every single day about accounting and tax and CRA and different jurisdictions. It's on our website. You're not going to see another accounting firm do that. Never mind another accounting firm, even a crypto accounting firm is not going to do that. This is something that we're passionate about, that we know what the space is. We are here to help you, and we will go ahead and continue to publish those articles because a lot of people have used it and relied upon in terms of making sure that they understand their obligation. I've had lawyers email me and said, wow, there's so much on your website. You're a really good firm, but you need to work on your branding. If I'm looking for a crypto accountant, you're not coming up first page on Google. You need to work on that. That's what I was told yesterday. But outside of that, we're really good at what we do. And we want to make sure that the community in Canada knows that you can rely on Block3 Finance to help you go from A to B to C through your journey in crypto.
Awesome. All right. So the next question is, I've been buying crypto over the years, and I would typically buy and then transfer the coins out. Each buy and transfer incurs a fee. What are the tax implications? What is expected for documentation?
I spoke about this to so many clients, and there is a glitch in crypto tax softwares. If you're buying and then moving it to a cold storage, if I'm understanding correctly, this individual is only buying, they're not selling, right?
I believe so, yeah.
Right. So if you're buying, let's say you're buying on CoinSquare and then transferring it to your ledger, okay? Your nano ledger. There is no taxable event, number one. Because all you've done is that you've taken that 1 Bitcoin and moved that 1 Bitcoin to your own wallet. Okay? So it's like you taking your 1 kilo of gold that was at RBC in your safe, and you don't like RBC. Now you take that 1 kilo of gold to TD Canada Trust. Just because you don't like RBC and you moved it to TD, there's no taxable event. So in this example, if you've taken your 1 Bitcoin from CoinSquare and you moved it to your hardware wallet, there's no taxable event. However, the fee that you incurred will be used to increase the adjusted cost base, the ACB. Okay. So let's say that you bought today, Bitcoin is at 97,000 US. Let's say that you bought $97,000 for 1 Bitcoin. And then to move that 1 Bitcoin from CoinSquare to your hardware wallet, let's say it costed you $500 US. Okay. Now your purchase price is not 97,000. Your purchase price is 97,500. So if you sell it 5 years from now and Bitcoin is at 500,000, then what we have to do as your accountant is include that fee that you paid in transferring it to your nano ledger to increase the ACB and account for it, right? So when you use Coinly or those tax softwares, they don't pick that up. Only an accountant picks that up. And the reason why that is important, when you go to CRA, and CRA doesn't have a clear guidance on this, but I've argued for so many files. Last year, I've argued for not Block3 Finance clients, but I've argued for approximately 16 other clients that came after they filed their tax return and they were audited by going to different crypto accounting firms in BC and so forth. I was able to argue and say that, listen, it went from a KYC account of Jeff to a hardware wallet of Jeff. Jeff never sold. He still has this. This is the blockchain address. And because now he's selling it at 108,000, there's no taxable event. And I've won, and Payal and Rui, Kevin, Warren, all the team members that we have in our firm, they've demonstrated that to the CRA and we've won those cases. So it's important to have a good record keeping. It's important to print that on-chain in a PDF format and keep it. There's a client that brought me binders of on-chain addresses because she's afraid that, her computer, the PDFs are going to go corrupt. So she started printing those on-chain addresses and put them in a binder. And she brought me all 7 binders and said, here you go. Here's all my transactions. So do what you have to do. But if you are DCAing paying, if you're buying, there's no taxable event, and it's easy to explain to the CRA if you have a good accountant that can do that.
All right. That totally clarifies that. And the last question that we have for today is, what are 3 essential pieces of advice for the crypto community regarding accounting and taxation?
Only 3? So I would say the number 1 tax advice or tax tip that I will give you is there's so many things that are moving parts in crypto. Okay. So the first thing is have a good accountant that understands when things are moving. And 1 hour is a lot of time in crypto. Okay. So because 1 hour is a lot of time in crypto, understand and have an accountant who understands multi-chain accounting, whether you're buying on Ethereum, Solana, Base, Binance Smart Chain, Avalanche, Polygon, yada, yada. Understand that having a good accountant is the foundation of your success. And that accountant will help you create a blueprint for your money. At the end of the day, this is your money that you're investing in, after tax money that you're investing in. So by having a good accountant will help you go from A to B. Okay. Blueprint for your money. Just remember that. The second thing, the advice that I will give you is that if you are in crypto long term, or if you're planning on being in crypto long term, create a corporation. The tax savings is amazing in a corporation. If you become a day trader, you can claim your small business deduction. Okay. And first $500,000 in Ontario is tax rate is 12.2%. Why would you want to pay 43% tax rate when you can pay 12.2%? I don't get it. So build that legacy for your family, for yourself. Don't get into a rat race of working 9 to 5 if you're in crypto. Create a corporation. Just as much as there's an upside in crypto, there's also an upside in tax savings. So understand that. Okay. That's the second.
Okay. Sorry, just to clarify that, would this also be applicable to people who just buy and hold? Let's just say you're just buying and holding and that's it. You're not trading. You're not doing any DeFi. All you're doing is buying Bitcoin and holding it, kind of like Michael Saylor.
Right. Even those individuals that are buying and holding, they don't just buy and hold. They stake. They do something else with it. Have a corporation. Even if you're just a holder, still make a corporation, because one day you're going to get up and say, I'm going to sell. You don't want to create a taxable event on a personal tax rate. Okay. And as I said, crypto, 1 hour is a long time in crypto. June, when we get into the bear market that a lot of people are calling for, a lot of people are going to be selling in 2025. And because you're going to be selling in 2025, you've been a holder since 2008. How much up and down can you take? A lot of people are telling me, I've had enough of this up and down. It's emotional stress. I'm going to sell. So why would you not have a corporation? Why would you be contacting me in June to create a corporation? Eventually, you're going to need a corporation. So just do it. The cost of inflation goes up. So therefore, the cost of articles of incorporation or incorporating goes up. So why don't you just do it and stake your Solana and your Nano Ledger at 6.5%? Take advantage of growing your money. Create a blueprint for your money. Don't just go and hold a Solana. Just even in your hardware wallet, you can still stake it. Take advantage of free money, right? Let me help you save that money when it comes to tax time. That's what I would say. Now, the third advice that I would say, record keeping. Record keeping plays a big role in crypto. Earlier on, I touched on so many things. I touched on if you're in Ndax. I touched on if you're in NFT. I touched on token migration. Record keeping is very important because honestly, you're just DCing, and then all of a sudden you log into your Nano Ledger. You're like, what is this S coin? I've never purchased this S coin. And at one point you bought Phantom. Now it became Sonic Labs. So record keeping and following what you have. Stay on top of it. Understand what's happening in crypto. Those are all important. Don't just go, I would say, like, don't be an ostrich. Just go buy something and not understand what you're buying, and follow the news and see what's happening in the marketplace. Crypto is volatile asset. Understand why Avalanche is down. Like if you're buying Avalanche, make sure that you follow the chain and see what's happening. Nobody buys it for the technology. Before, we used to have this meme coin that said, I'm in it for the technology. Nobody's in it for the technology. Everybody's in it to make money and making sure that take advantage of all these things, right? The fourth and the bonus one that I will give you is buy coins that will exist for a long time. Don't buy Trump coin. Don't buy a meme coin that just got launched. Buy the top 10. Those are the top 10. They're on CoinGecko, CoinMarketCap. It's easy to trace. It's easy to find what's happening with them. And because it's your money that you paid after tax that you're investing, make sure that you're taking care of it. Those are the advices that I will leave you with today.
Awesome. Those are really good pieces of advice. But yeah, so Mahad, those are all the questions for today. Thank you again so much for being here to share your wisdom and your knowledge on crypto taxes and your experiences as well. So thank you so much for that.
I appreciate it. And those questions from the community is welcomed. Continue to ask those questions. It helps and share with the universe in terms of those answers and goals guidance that people necessarily don't know. So kudos to everybody who participated in asking questions. And kudos to you as well for taking the time to compile them and sharing your 1 hour with me and doing this journey together. I really appreciate all the hard work that you do as well.
All right. Well, thanks everyone for listening in. And I hope you all learned a lot from this interview.